Good afternoon. In this video, we're going to have this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of the social media accounts. Also, please like the video. These take a long time to make. And subscribe to the channel if you haven't done so already. I didn't take that many trades this week because of FOMC. It's usually choppy before FOMC, and I just haven't been doing as well as I normally have. I used to have flawless days almost daily, 1 or 2 losses here and there, but it seems like I get at least 1 loss per day. I can't seem to shake it. I did have a flawless day on Friday, but for some reason I just almost every day I take a loss, and it's kind of annoying me a little bit. But anyways, I did finish the week with 16 wins, 4 losses for a win rate of 80%. Not that great. I mean, 80% is good for a lot of people, but for me, 85% is the target. And if I don't do 85% or plus, I'm kind of a little disappointed. But I mean, was FOMC. It was a tricky week. The conditions in the market has been completely different. Been trying to adapt to it, trying to adapt to the changes. Sometimes you do, it's been fake outs. It's just been a very, very tough market to trade the last 2 or 3 weeks. Been trying to adjust to it and make changes, and sometimes it just no matter how much changes you make, it's just never good enough. You just gotta just keep doing it until you find the happy medium. So with that said, we'll start with Monday. Let's see, traded his room on Monday. What was Monday the 20th? Yeah, okay, just making sure everything's working before I start rambling. Okay. Monday the 20th, SPY calls over 392, which is right here. At this point, I was thinking, okay, they're going to push the market up going into FOMC, because usually they like to run the market going into FOMC. So that way, if it does dump, that's the Fed's idea of a soft landing, that if you prop it up $10 and it pulls back 15, it only really pulled back 5, something stupid like that. I consider the soft landing. I don't know. That's just my theory of it. But I was thinking they'd run it up a lot more than what they did. I mean, they really didn't run it up too much. I mean, they did run it up almost $10. So, but anyways, traded his room. I said what, 391. 392, which is right here, the high of this candle right there. Well, technically it's like 391.90, yeah, 391.90, but I rounded up to make it a whole dollar or a whole half dollar, just to make it easier to remember. I do that. What was the time? I waited out the first 30 minutes most of the week. Now this is what I'm talking about. You get a green candle here. If you took puts right at the lower day, which sometimes I do that, it was a fake out. Then they went up here and did a fake pop, and they pulled back. So you get a fake out and a fake out right here. It pulls back, then it pulls, pops again, and it pulls back. But I did take it at 10.13, which is right in here. Looks like it took it in the pullback. I'm not quite sure, because it opened here. Oh, so yeah, this is probably what I ended up doing, because it faked out here and it pulled back here, and it went up, came up to this 392 area. I probably bought it because technically you see it opened right here and it popped, and it came back down and it popped again. Yeah, so I probably bought it right up in this area when on this candle right here. Let me blow it up more so you can see. Yeah, I probably bought it more up here in this candle before it dipped, because I had the 39.55 calls at 8:30, and then it popped and ended up being a nice play. Just had to deal with the dip. But this is what I've been talking about, the double fake out. So yeah, they went from 8:30 to 11.70. Then I took puts at 11.46, which is right here. It kept going up and up and up. I don't know why I didn't buy the breakout right here. I think that because when I bought it here and it pulled back, then popped up, I just didn't feel comfortable chasing it. I probably could have. If I bought calls here, probably would have been good, but I didn't. I just waited. Then you kind of have this like little rounded top right here. You can see right at this RCT trend line. It dropped here, got bought, dropped here, and it popped off that. It came back down. Then when it broke below this little area of 393, that's where I grabbed the 39.40 puts at 9.30, and they went from 9.30 to $23. So that was ended up being a nice play. I probably could have bought calls here. I don't know why I didn't, but I waited and bought puts again at but the 39.45 puts this time at 232, which is right. Probably should have bought it right here. This would have been a good area to buy, but I didn't. I bought it at 232 right here. I bought it when it came back up to this 393 area, so I didn't buy it here. I probably should have, but it popped back up, and I did grab it right here. So I grabbed the 39.45 puts at 920, and then went from 920 to 12.50 right there. So that was not a bad move. That ended up being a good play. I bought it again at 313, so which is right here. Yeah, so I bought it up here, it dropped, and it came back up here. I probably could have got it right here again, but I think at this point, I know it's always easy to look at it after the fact. This is why I always rant about that when people say, why didn't you do this, why didn't you do that? When things are in real time, you don't know how it's going to pan out. So when you look at the day after it's completely done and you're like, oh, I should have done this, I should have done that, it's so difficult to come up and see it that way in real time sometimes. So I'm probably thinking at this point in time that when we got the put right here and we got that play right there, when it bounced off VWAP and popped back up, I didn't reload right here because thinking that we're making a higher low, that we may actually end up going back up to higher day, but we didn't. It ended up pulling back. So when I broke below this 392.50 area, this is where I grabbed the puts again, the 39. Yeah, I bought the 39.45 puts. Yeah, this is exactly what I did. This is just ended up being my final play of the day. Ended up being a loss, and that's what I ended up doing. I took the puts right here that it popped on me, and that's another thing I've noticed is not only the first half an hour has been really bad with CHA, but that the last half an hour has been pretty much the same way. The market's been getting pinned and not been that much action. But this, I probably would have done that again. I think I might have got a little prematurely. I probably should have waited more or less down to the 392.20 area for more of a confirmation of a more downside as it pushed through VWAP. But me, I probably grabbed it right before VWAP because sometimes the moves through VWAP like this and this and this are just so massive that it doesn't like really react to VWAP that much anymore. It just flushes through it. So I probably got it just a tad bit early. Thinking, okay, if I get it right here, it should flush through VWAP and end up breaking 392, but it just didn't. Ended up bouncing off VWAP and going against me and not working out. So, I mean, I probably would have taken the same play again. I could have probably played a little more safer and got it down here. But, like I said, in real time, you got to make decisions, last minute decisions, quick decisions, and sometimes they're not always the best. But, I mean, that I probably would have ended up doing again based on it rejecting right here, because I really thought it was going to go back to higher day, but when it rejected right here, it kind of was like, okay, maybe we're not going to go back to higher day. Maybe that was just a fake push, and we're going to push and we're going to dump more. But the trap caught me, and it is what it is. So I finished Monday 3 wins, 1 loss, so not the greatest. I mean, I like to try to not have a 1 loss on a Monday, but it is what it is. Now on Tuesday, I traded his room. SPY puts under 396. Let's see, let's back this out a little bit. We had a run up pre-market. 396 is right. Okay, we must what time did I call that? Yeah, 9:22. So yeah, that was right in this chop. No, it's just slightly below it. Yeah, so this chop is like 396.67. I kind of called down here, down to this area, just to give it a little more room, because if I called this area to look to watch, that the slightest wiggle would have definitely triggered it. And I know some people trade off my ideas in the morning. They don't wait the first 10 minutes. They don't wait the first 30 minutes. They just go solely just based off that. Got more guts than I do. I just don't like doing that. you get too many fake outs, and I just don't like doing that. I prefer just to wait for something better. So I just end up waiting out the first. Usually I wait out the first 10 minutes, but lately I've been waiting out the first half an hour. So, and did I wait out the first half an hour? Yeah, I did. First trade was 10:05. So yeah, I took the puts at 10:05, which is right here. Yeah, right here. See, this ended up working out pretty good. Now, if I was looking at puts, first 10-minute candle, let me blow this up. You can see. First 10-minute candle ended up being kind of an inverted hammer. If we took puts right here, the new lower day on the first 10 minutes, on the second 10 minutes, it would have been a fake out. Then if we took calls right here, it would have been a fake out. This is what I'm talking about. Almost every morning, and we've been counting in them. Actually, the last couple of days, I've been counting them. There's been 2 fake outs. Let's see, go back to Monday. 1 and 2. Let's see, let's go back to Friday. Let's go back to Friday and see if there was Friday double fake out in the morning. 1, 2. See what I mean? You could have played this, but if you bought lower day right here, it got bought up pretty quickly. So yeah, double fake out, 2 fake outs every morning in the first 30 minutes. So I was counting them. I don't think I was counting them yet on Tuesday, but I was counting them at the I think definitely on Friday. So you get fake move right here, fake out right here, and fake out number 2 right here. So when I broke below the 397.20 area, I grabbed puts. I grabbed the 39.80 puts at 8.50, and they went from 8.50 to $14, and that dropped right there. Then it popped up. Did I reload again? Yes, I did. I reloaded at 10.52, which is right here. I don't know why I didn't take it here. And I got this move right here. And when I came up here, I probably thought maybe this could have been another fake out. I caught this move from here to here, where it bounced off the 20 EMA. And it opened up here. And it came back towards high day. I probably thought it was going to break out. I didn't trust it. Then it dumped back down. I mean, when it came back down underneath this area again at the 397.20, I could have bought it again. I'm not quite sure why I didn't. Sometimes I don't like to reload, especially maybe this time of the day, being so many fake outs. I just didn't want to take the chance and just waited. So it's possible that's probably what I was doing and thinking at that point in time, that I already caught this play. I wanted to let things play out a little more because I have been doing that. Let the chart and let the things settle down a little bit before taking anything. I took puts at 10.52, which is right here. As you can see right here, I tried to bounce up the VWAP, got rejected, came back down underneath the 396 40 area, and I did grab the 39.70 puts right here from 8.50 to 9.60. Not much of a move. Another, it tried to break lower day and it didn't break it right here. It's just this whole, it's before FOMC. You're not going to get much of movement on FOMC. It's usually pretty choppy. Usually will stay within a $2 or $3 range. So I was not expecting it to have a big move. But one of the most dangerous things to do, in my opinion, I think, is that when you have a range day, and I do play these and I do take them, and I cringe every time I do, but sometimes you just got to adapt to the conditions. On range days, I do not like buying puts at the top of the range, and I do not like buying calls at the bottom of the range. I do it. I do play the range, but I cringe every time I do, because to me that is the riskiest plays of almost all of them, because SPY acts stupid all the time. It ignores bad news, and it will fly on any stupid thing it wants to, and it could dump on any slightest news or tweet or whatever. So when you're buying at lower day and shorting at higher day, I mean, all it takes is something to happen, and it will dump hard or pop hard on you. And to me, that's just the riskiest kind of things to do. But I mean, if it's ranging, usually after you see a huge day, after you see a big day, especially like overnight, you'll see a range day the next day, usually. But sometimes you can see continuation. but it's rare to see 2 or 3 strong days in a row without having a narrow range day, which the range could be anything from $2 to $5. But on a big range, on big massive days, if you see a $10 day, $10 plus day, usually the next day could be a range, or if it does continue for another $10 day, you're up $20 in 2 days. It's more than likely high probability that the third day is going to be a range day, because the market does need to consolidate, and that's when they do the liquidation traps, so liquidity traps. So anyways, then I end up taking puts again at 259, which is right 259 right here in this. I can see why I took it here. We rejected this area of 397.30. It came back down, flushed through VWAP right underneath this area of 396.25. I definitely could see why I took it here. I bought the 4,000 puts at 910. And pop back up, and I remember averaging down right here. This is the top of the range, well, this little area, this channel, but also inverted head and shoulders, the left, the head, and the right shoulder. I probably should have dumped it right here, but I think I added more right here, and when it started to come down, it popped more, and I did end up cutting it. So I bought it at 910, added more at 740, just a little more, and made my average at 825. Then I cut it at 3, and it ended up being a small red day. So it is what it is. Just didn't work out. But FOMC is Wednesday. That's what we'll get to next. Okay, now FOMC day. I don't even think I even put out any trade ideas. It's just not worth it. I probably should have. SPX is so expensive on FOMC day. They end up being like $25 at the money. It's just so ridiculous. I don't even trade it. I mean, I could go to SPY and trade it, but I could trade SPY. But the thing is, I look at it from the point of view that FOMC is FOMC is where the real action is. I mean, if you take trades before it, and I mean, you can, it's choppy, the action probably won't be there. I mean, you can play SPY and you'd be okay. But if you take losses, you take, like, say, too many losses, I mean, you're going to be really sketched out from playing FOMC. So to me, I prefer lately. I used to play a little bit before it, but I think at one point in time I was taking a loss or two before it. And I just like, okay, this is not worth the risk. This is not worth the time. So on FOMC days, it's just better just to take the morning off. Go out and do something. Go out to breakfast. Go somewhere. Do something. I don't know. Do for the first few hours and come back at 1 p.m. And don't trade the chop or the misdirections or whatever you want to call it, and take unnecessary losses and miss the real play. And the real play is FOMC after. The big plays come at the announcement when Powell speaks, and the day. There's usually 2 or 3 good moves, and to me, it's just not worth taking added risk or unnecessary losses until the end of the day when FOMC happens, because that is the real action. That is the real part of the day. So take the morning off for next FOMC so you don't have to take unnecessary losses. So the SPX strangle play, I had 39.50 puts at 9:30, and I had 40.50 calls at 9:10. When Powell speaks, you have to play like 100-point range, and that's at $9. So on non-Powell days when he's not speaking, SPY still moves pretty good. But the real kicker is that when Powell's not speaking, you can get at the money SPX puts and calls for the same price, and they'll be at the money, and they'll move triple because they'll still move like $2 or $3 without Powell, and they will end up doubling or tripling very, very easily. As versus this is so expensive that they would need a massive move just to even double, and it's just kind of crazy. So the calls went from $9.10 to $13. And the puts went from 9:30 to I mean, the puts didn't even go anywhere. I mean, right when it dropped, let's see, it opened Yeah, no, opened down here. It closed up here. It didn't even drop. I mean, it barely dropped right here. Couldn't even get out of the puts. I stayed in it. Usually the first move is the wrong one. It popped up, and I did sell the calls into this push up here. It came back down. It chopped. Then it finally dropped right here. By that point in time, the puts were pretty much worthless because of the IV was so high and so through the roof, so it didn't really matter. Then it pushed again, then it dumped. Even down here, it still wasn't enough, and down here, it still wasn't enough to turn them green. So I did manage to get out of the 930 puts at $1, like 60 or something, and the calls went to 13. So the first probably FOMC I took that I was actually red on for and probably a long time. But it is what it is. It was just a small loss, so I kind of was hoping it would have been better because usually it's the first move is the wrong one. I'm thinking, okay, if it popped here and it's pulling back, and there was actually a lot of bad news. There was a lot of negativity in the this day, and then when it dumped, it just didn't dump fast enough. It should have done. If this candle happened, this candle, we probably would have been green and probably had a decent play. Probably wouldn't have gone that much more than probably $11, $12 or whatever, but it definitely would have played out. But it is what it is. Then let's see, yeah, the small FOMC lost. Then I ended up taking puts at the last hour. I took puts at what, 304, which is not here, right here. Yeah, right here, right when it broke below the 397.50, I grabbed the puts. I grabbed the 39.85 puts at 950, and they went from about 950 to 1910. Ended up flushing down on Powell speaking, so definitely was happy about that. I could have bought it up here, but I just wasn't sure. So when it came down here, I definitely did take it because look right here, when it got down to the lower day, I got bought and rocketed back up, something Powell said or something. Then it dropped back down, and I grabbed it right here and it ended up working out, popped back up. I did not grab it again until what, 336? 336 right here. When it broke below the 396, 397 area, that's where I grabbed puts again. I grabbed the 39.85 puts at 930. And they went from $9.30 to $19 in that push right there. So that ended up being a good play on that. So yeah, the last play was right here. Now we got like, see what, one move here from the actual announcement. Then the second move was Powell speaking right here. Then the third move's right here. So you usually get 3 moves per FOMC. Even on days where there's no Powell, you do manage to get at least 2 moves. You just don't get the 2:30 announcement projections move when you have Powell speak, but you usually get at least 2 moves on non-Powell days. But on Powell days, you get at least 3: the announcement, his speech or press conference, then the end of the day reaction when the market just finally absorbs what is being said and stuff. Because sometimes the market just reacts a little bit, and then after when he's done, like, oh, wait a minute, then they take the time to actually absorb what was being said and what's being done, and they're like, okay, maybe that's not good news, or maybe that is really bad news, and the market just ends up going more in a direction or the opposite direction. But yeah, FOMC days, 2 to 3 moves, depending on Powell if he's there or not. So always gotta look for that. Now on Thursday, I was kind of shocked about this day because I think this is when Yellen was speaking, saying that there was banks having issues or something like that. I was kind of very, very surprised to see that. Yeah, because I think Yellen said that something along the lines of that the FDIC or the Treasury wasn't going to cover all deposits. This might have not have been fully Powell. This could have been Yellen too, mostly Yellen, and it dumped. So I was kind of surprised that after those comments that we had this massive dive, that we actually recovered most of this. Yeah, technically, so we were right at the 399 level before FOMC, and we recovered it all back. the next day. So it's just like the market ignored what Yellen was talking about. And, I always refer to SPY as like a toddler. I mean, just it's got the attention span of a toddler. So what it hears now is going to forget in 10 minutes or half an hour or an hour or whatever. SPY actually just acts the same way. Traded Israel on Thursday, which is the 23rd. I said SPY puts under 393, which is right here, this low. I really thought that we were in a bear flag. Let's see, I'll pull it out a little more. Yeah, right here we get this dump right here. Kind of got a bull flag going right here. I mean bear flag, sorry. So I was thinking, okay, if we break this area right down here of 393, that we're going to end up going down to previous day's lows and maybe even lower based on Yellen's comments and what happened on FOMC. But it didn't. It actually broke out. I kind of very, very surprised with the action on on Thursday. Now I took puts at 10:32, which is right here. I probably should have not taken that. I think I was looking for a top. I know that we got it like right here. 10-minute candle formed. Fake out number one right there. We didn't get a fake out number two. It actually took off, which I didn't want to take calls. I was not comfortable taking calls, especially off from the news from Yellen and Powell's FOMC and the projections and all that stuff. It just was not good whatsoever because interest rate hikes are going to hurt the banks more. Banks are going to fail more, and if they don't raise rates, inflation is going to roar. I mean, the Fed's going to put themselves in a corner, and no matter what they do, it's going to be wrong. Someone's going to suffer big. So who are they going to let suffer? The consumers, the people, or the banks? And usually they're usually where big money is, the banks. So they don't care about people. The government doesn't, neither does the Fed. But anyways, I was not taking calls based on previous days' actions, comments, and news, so I did not feel comfortable. I just waited. So we had this inverted hammer right here, then we had this red doji right here. So I was like, okay, if we get underneath this 396.40 area, I'll take puts. I grabbed puts, the 39.65 puts at 790, and it just popped on me. I probably should have waited more, but I probably should have waited for this 395, 396 area. But for some reason, I got ahead of myself, thinking, okay, we were going to do a morning pop, because that's what's been happening a lot lately. Is we've been getting morning pops and afternoon drops, and we don't know if the morning pop is going to last 10, 11, or 12. Then we dump all afternoon. So I grabbed it at 7.9. Grabbed the 39.65 puts at 790. I bought more at 4 and averaged it down to 5 at around 10.50, which is right here. Ended up pop more. I ended up stopping out, and that ended up being a mistake. I mean, first of all, I probably should have never bought in the first place right here. I should have waited for more of this kind of action. This is a nice little descending triangle right here. It's forcing pressure down, making lower highs on the candles, and at the bottom, the floor is at 397.90. And so when it broke right here, this would have been a good area to take it. But when I averaged down, I bought puts right here, averaged down up here, pop more, I end up stopping out. So I had to pause the mic. I was getting ready to cough. So yeah, that it definitely should have made that trade, and probably should have waited for a better opportunity. But I was going in with the mindset that morning pop, afternoon drop, there's nothing good in the market. This is just a short squeeze. The market's just being stupid. So I decided to try to catch the top right here, and it just didn't work for me. Then it squeezed, that added here, and it squeezed more. So it is what it is. That stopped out. Then it actually, like within 10 minutes, 5 minutes after I stopped out, it actually ended up dropping. So I did grab puts again at 11.29 right here. No, 11.29. So I grabbed it in this candle. So I grabbed it right here. I can see why I grabbed it here. I didn't grab it here. This is the mistake where I grabbed it right here. This time I waited for this low. So I grabbed it right here. I got it closer to at the money. I grabbed the 39.90 puts at 940. Did go against me a little bit. Kind of was annoyed with this action a little bit. So then it finally dropped, so I was able to get out. So they went from 940 to 1040 in that drop right there. Then it popped back up. Then I end up buying puts again at 1240, which is right here. Pushed through VWAP. Dropped down to the 20 EMA, which is the light blue line. Bounced, came back down. When it got below this 397.20 area and pushed through VWAP, that's where I grabbed puts again. I grabbed the 39.85 puts this time at 920. And they went from 920 to 1260 right there. So that ended up being a good play right there. So then I grabbed puts again at 148, which is right here. Yep. Got a little bit of a move right here. Lower day is right here. Got bought. Bounced up when it got below this body candle here and this here, with this right around the 395.30 area. I bought puts. I bought the 39.60 puts at 740. And they went from 740 to 910 right there. So I got a little bit of a move. I didn't buy puts here. I was not expecting this kind of a move. I'm not even sure if that was news related or not, but that was a pretty big move. I bought calls at 240, which is right here. I bought it at, I do remember playing this, and we had this huge drop right here, and we had RCT right here. I bought right at RCT, which is this orange line, and previous day's close. Let's see, what was previous day's close? Which is the 392 area, 392. What day is this? 23rd, 392p. No, previous day's close. Actually, no, I remember this. Yeah, previous day's close was 392. That's where I ended up actually initially buying, because I ended up buying 39.45 calls and adding more. So I bought it at PDC, thinking we were going to get a bounce, and we didn't. It flushed through. And RCT line, which is this orange line, even though it's right there, it was down here towards the 391. Not quite 391, but it was like right around 391.25-ish or 391.40. It was right down here just a little bit. It was underneath the PDC just a little bit. And that's where I did end up adding more. I took the chance. So yeah, previous day's close was right here, 392. That's where I initially bought. Then I added more right here, and just took the chance that, you know, we had this. We went from what, 399. We're down $8 with no real substantial bounce at PDC than RCT, and usually PDC does seem to get ignored sometimes, but RCT seems to end up acting as a good support and good resistance well, I shouldn't say momentarily, but most of the time. So I took the chance and I added more. So I added at 730, added more at 560, making my average at 650. And it did drop a little more. Then it actually had a really massive bounce. And this was something that Yellen said. I think that she said that they would cover more, or the banks were doing good. I don't remember. There's just so much going on with the banks that yeah, Yellen said, this is Yellen right here. I do remember that. I was in the trade, and she said something about the banks either covering the more deposits, or deposits you don't have to worry about, or the banks are in good shape, something along those lines, and it raged. So those calls, those 39.45 calls I had at the average of 650, went to 13.60, 100% move on that little play. Thank you, Yellen. And I called it a day. I was kind of surprised that after that comment, it dropped back down and back down to lower day and got bought again. I was like, okay, I've had enough. I don't want to take another loss. So moving on to Friday. Now, Thursday, Friday pre-market. This is another bank failed. I don't remember which bank it was. It was a big one, too. I think it's a UK bank, Dochet. I don't remember what it is. I probably didn't even say it right, but anyways, there was another French bank that didn't do well. That's what caused this, and then it just rallied like nothing even mattered. This is SPY acting like a little spoiled brat toddler where, okay, the other bank failed. Who cares? We're just going to go. So pre-market on Friday, SPY puts under 389.50, which is down here. I was going with puts, just thinking, okay, we're going to, based on that news, because two banks failed, we dumped hard, and it just didn't matter. So a third bank, a bigger bank failing, it just gets ignored. So red candle, and this extra candle actually did end up providing more continuation. Got to lower day, faked out, got to higher day, faked out. So we got a fake out here. But I did take calls at 957, which is right here. I did buy this. I did buy this fake out. Yeah, right at 957. I did get in and out pretty quick, so not quite sure why. If there was something news related that happened that made me want to buy calls, but it didn't drop. It didn't hold lower day. Pre-market lows. I mean, it held low pre-market lows, but it came back quickly to higher day. I probably shouldn't have done it because, I mean, that's fake out number 2 usually. But I took the calls thinking, okay, maybe this thing's going to act stupid. I'm not quite sure why I took the calls right there. But, I mean, I see why I did. I broke out. But based on the bank failing and all the things going on, it's not really positive news out there. So, but I did take this play. I did take the calls. I took the 39.50 calls at 960, and they went from 960 to 1140 right there. Then I took calls again at 1026, which is right here in this candle. You can see fake out, came back down, but it quickly came back up to higher day again of this area again at 391. Even so you can say 392. I did buy calls again about the 39.50 calls again at 940 this time. And they went from 940 to 1390 in that push up there. Then I bought puts at 1046, which is right here. Yeah, fake breakout right here. Didn't get quite to get the PDC for rejection. I was kind of looking at that, but it rejected it prematurely, and it came back down. And when it broke below this 391 area, that's where I did grab puts. I grabbed the 3,900 puts at 850, and they went from 850 to 1160 right there. Popped a little bit, then it actually dropped. So it did end up working out quite a bit. And SPY has been doing this like crazy. You look at these 10-minute candles. That's from 391.84 to, I mean, that's just almost $2 plus a candle. That's just ridiculous. These candles are account killers. I mean, if you get in it and it goes against you, I mean, you could just end up being down 50% really, really fast. That's why I always label the SPX plays lottos, because they can go down quite a bit really, really fast. If you want something safer or something more manageable, play SPY. Don't play SPX. I'm not going to change how I play and what I play to meet other people's risk tolerance. That's your job, not mine. So you just need to adjust. And if you don't like the wild swings or the wild price fluctuations with SPX, switch to the Q, switch to SPY, switch to something that's more manageable for your style or your risk tolerance or whatever. But yeah, ended up being a nice little play right there. Then I got puts again at 1246, which is right. No, I didn't grab it right there. 1246. I grabbed it up here. Some reason I grabbed it up here. I should have probably grabbed puts right down here, but I didn't. Probably didn't challenge. I never covered the challenge of the IRA plays. I don't want to do a 2-hour recap. I just cover the main account plays because that's probably really what matters. So PDC rejected. I thought about it. I just didn't want to take it. But when it came back up to high, this is probably where I ended up just grabbing it on that. If it got up to it popped up here again. Short the pops. Basically, that's been my mentality most of the trading week, or that every time it pops, you short it. So it popped here. This is what I did. I shorted it. So I grabbed the 39.40 puts at 960, and they went from 960 to 1120 right there. So it popped, short. Well, I didn't hear, but pop, short, popped, short, pop, short, pop, short. Then it just ended up making higher highs. I mean, the yeah, higher highs and higher lows. So it just kept making nice ascendant triangle right there. If you draw it, you can see it right there. I mean, you can draw it so you can actually see it. I mean, I could see it without drawing. I don't usually draw stuff like that because I don't need to. Oops. You see it right there. It doesn't need to be perfect. Draw it like that. Doesn't need to be perfect. I mean, I know the dips below, but this means it's just a rough draft. I mean, it's a rising wedge right there. So I don't usually draw lines because I don't like the noise. I can see the pattern without having to draw the line. So I kept making the rising wedge. So I did, so we covered the 1246 one, which is right here. I bought the pop, shorted the pop. Then I bought puts again at 243, which is right here. So we broke out higher day again, pull back, pop up here, and I bought it short. I bought puts up here again at 39.60 puts at 720. And then went from 720 to 940 in that little push right there. So I didn't. If you held for a bigger move, you would have got burnt on that. But if you stuck to the $1 or $2 plus plays, you would have done well. And I know I just SPY keeps making higher highs and I keep shorting them, but I kept looking at it from the mentality, from the point of view that the banks are failing. This another big bank failed. All the things that are going on in the world that we're just one headline away from having another big dump, and there's really nothing positive going on for the market to keep going up. But the market is like a spoiled little brat. It just wants to ignore everything and do what it wants. And to me, I was also thinking that we were going to get an end of the day dump too. Thinking, okay, going into the weekend, banks are failing, all kinds of things going wrong. If another bank fails over the weekend, that just, people are going to sell at the end of the day and kind of like get out of it in case something does happen. But we didn't get that. I mean, we got a little bit of a drop, then we just got a pop. And I called it a day after this. I mean, I got 5 trades right. I've been capping my main account plays at 5. I don't do more than 5. Anything I do over 5, I put in the IRAs. The IRA and small accounts didn't get too much action this week because of FOMC. So, but anyways, we did not get that end of the day dump. No fear about banks quitting, or not quitting, but failing. So it just, market just doesn't have no fear. It just expects the Fed to bail them out. And that's another thing that's kind of been irking me the last couple of days, is that the Fed spent like 7 months to a year doing quantitative tightening and reducing the balance sheet, and it took 7 months to a year. And they bought back, they eliminated seven months to a year's worth of QT in a couple of days or a couple of weeks to save the bank. So they're back to pumping liquidity into the markets again and just saving the banks, and this should be reducing their balance sheet, and they're not. I think they're just looking for any excuse to keep QE. And to me, I think that's annoying as hell. I mean, they should get out of the market and just let the market act natural. If it fails, it fails. I mean, eventually it will rebound, but the Fed just can't stay out of the market and stop saving things. They just let the market act as it's supposed to, and it will correct itself over time, but it just doesn't want to happen. So a little bit of a rant at the end. But anyways, that's going to do it for the recap. I hope this has helped. I know I had to cut the video so many times between sneezing and coughing. I'm not sick, but just having allergies, I guess. So anyways, thanks for watching.